Hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 27th. Michael Boutros here with you this morning. Mark, Mohammed, Pete, Pooja, Tony, great to see you guys all in the room. Hey Johan, great to see you as well. So we do have some commentary coming on the lines today from Jerome Powell. I have some proprietary research here from Prattle, an affiliate company that we work with. On Fed research. I'll read to you in a bit, but on the docket for today, we're obviously be taking a look at the DXY. We've been talking about this for a while. 90.11 is kind of the line in the sand for the near-term downside bias. If we do top that, we'll be concerned for a rally higher towards 91.33, but as it stands right now, we're still looking at this 90.07, 90.11 region for near-term resistance. So we'll be looking at that. We'll look at dollar yen, still looking for a move higher, possibly there to move. Dollar CAD, I'm short on the scalp side. Jamie's short on the swing side. Stops at 27.30. Still got a little bit of room there, but we'll be taking a look at dollar CAD, Kiwi, Aussie Kiwi from last night. Previous day's update, from last night. We'll go over Aussie and Aussie Yen as well. And we'll take a look at what the Aussie's doing. Been watching that one very closely. Any other specific trade setups that you guys want to review or any specific questions you have throughout the course of the session, as always, feel free to stop me at any point with questions you may have. Okay, let's jump right in. Okay, so it looks like actually dollar CAD just kind of made that run towards 27.30 right now. So we'll be looking on that rally to see how that stretch works out. You know, we're still below a major resistance, so we'll take a look at that in a moment, but let's jump right in. Here's DXY. I'm not going to bore you with the weekly charts. We've gone over this many, many times. Pooja says, Euro Aussie, please. Anything on the short side. Euro Aussie, you got it. Euro Aussie for Pooja. Okay. For the DXY, there's really nothing to update here on the weekly charts, guys. Major key support, still 88.18, 88.71. We've been talking about that for weeks. 91.33, this is the near term or broader, I guess, bearish invalidation level, and that's the level I would be worried about if we do mount 90.11 today. So we're just scratching the upper side of the underside of resistance. I'll show you in the daily chart in a moment. But that's really your big major resistance. So even if we were to make it into this level, you'd still be within the confines of the broader downtrend, okay? You did see some near-term, wouldn't even call it divergence, but certainly the momentum waning signature suggests the risk is there. Remember, I don't want to go over it again with the analog, but as far as the analog from 1994 decline is concerned, we are actually looking for, over the next week and a half, that new low in the index. If that, I guess I'll just do it real quick. If that, analog is to follow suit. So again, just to put things in perspective of where we are right now, right here. So essentially for the next 2 weeks, the analog would suggest further weakness is likely for the index down near 86.75. Even the near-term bearish invalidation level at 91.33 is reflected here in the analog. Okay, so keep that in mind. We'll be following this very closely over the next few days, looking for this dollar index rally to fizzle out near term, possibly here below 90.11 today. Here's the daily chart. Looks like even the daily chart still has us within the confines of this descending slope off last year's high. The median line here has been pretty decent on pivots. Resistance still highlights near-term resistance while below 90.28, which is the high day close for the month. Okay, intraday, we're looking at 90.11 as sort of our line in the sand. Okay, former swing lows, pivot break, real nice pivot along here all throughout February trade, resistance, there it is. Okay, so look for some near-term exhaustion here. Momentum is at 60. If it's going to turn, this is sort of an area of which you'd like to start to see that turn. If we breach higher, don't be a hero. Stay on the sidelines. Again, 90.50 and 90.11, 90.89 would be the next big region of resistance as reflected by the daily charts and those weekly charts. Any questions on where we stand with the dollar index? We're testing some pretty interesting waters here. Now, I do want to read you some commentary, like I said, that we got from our affiliate firm Prattle. So with regards to the Fed speakers, obviously Jerome Powell is on tap today. Just going to read you a quick excerpt from what they're noting. In an otherwise quiet week in global central banking, Jerome Powell will make his debut as Fed chair with a speech on Wednesday, which is tomorrow. Although his comments are likely to be unremarkable, he could signal tighter policy to come from the Fed. New policymakers often make a point of taking a tough line on inflation to avoid spikes, in inflation expectations. And Powell is likely to follow suit by signaling a rate hike in March. So if we take a look at what the markets are expecting, here's what the CME FedWatch tool is looking for expectations. For the March 21st read, we're looking at 87% chance. So markets have all but priced in a 25 basis point hike heading into next month. The commentary continues by saying 3 Fed speakers are scheduled for this week, but newly minted Fed Chair Jerome Powell is most certainly to be the biggest market mover. In aggregate, Fed sentiment has declined towards neutral so far this year. But when looking exclusively at FOMC statements and minutes, along with the speeches by outgoing Chair Yellen and incoming Chair Powell, trend has been a bit more hawkish recently. This suggests that while the rest of the committee may have been swayed by market volatility, the most important policymakers and policy documents have remained somewhat hawkish. This week's speech by Powell is likely to confirm this more hawkish posture, but speeches by Dudley and Bullard could sound a bit more neutral. Any increased hawkish language from Dudley and Bullard would likely be taken as a clear signal that the Fed is hiking rates in March and may even suggest a hastened pace of rate hikes, perhaps 4 25 basis point hikes this year. So the focus is really on the commentary and that whether it leans a little bit more towards the hawkish stance or towards the neutral stance. They're suggesting that Powell will be more hawkish, but the subsequent speakers, Dudley and Bullard, may be a bit more neutral. If they turn out more hawkish, whether it's concerns over rising inflation or concerns over excess volatility in the equity markets, that would be taken as or they're suggesting that would be taken as a clear signal for the Fed hike next month. So all that being said, guys, obviously our focus here is always on the technicals, but from the fundamental backdrop, markets are pricing in essentially a 25 basis point hike next month, and the Fed speakers that we're expecting this week are likely to further validate or further give credence to that expectation. All right, so keep that on tap. Again, I showed you this yesterday, but just a quick reminder, the most important Fed central bank speakers this week. I posted this on Twitter, but keep this in front of you guys just to know, okay? You got Jerome Powell on tap tomorrow. William Dudley obviously is going to be another big one from the Fed that will be on tap. So we'll be looking for commentary from that. Could shake things up on the dollar, but definitely something to be mindful of. Okay, any questions on that? I know that's just kind of some background information I wanted you guys to know, but let's jump right back into the DXY. So here's what we looked like last night. Again, here's what we look like today. On the intraday charts, the most important level is going to be a break of this range, as I noted. Keep your focus on the 89.58, 90.11 range. And it's basically what we just did, guys. We came into 90.11 or 90.07, which is the resistance range we were looking for. We just pulled off. We're already down to 89.95. So looks like this range is going to be the influential price range to take an eye on for the index. Obviously, when we look at this, we look at what are the implications for the euro, which is the most heavily weighted aspect of this index. And as we look at the euro, we're looking for the possibility of an exhaustion low. You might have seen Jamie just tweet that out a little bit ago, that he's looking for an exhaustion low, a little bit down lower in the euro dollar, somewhere in the range of 22.30s would be a nice spot, I think. But the bottom line is, the euro, we're looking for some upside slope here, and that's just based on the account of the dollar index and the analog that we've been following. Okay, so on its face value, your weekly opening range has now taken shape. Your weekly opening range low drifting just below near-term support that we noted at 89.58. Near-term resistance, top side of the range, is 90.07, 90.11. Look for that break to give you some near-term guidance. Obviously, the favored move for us, guys, would be a downside move. Any questions on the index, daily, weekly, or intraday? Really flirting with resistance here. See how it pans out as we get into the US Open. All right, let's jump into some of the more juicy pairs, as it were. Yesterday, we went over the dollar index. I like this Aussie setup. I've been watching it very closely. As a disclaimer, guys, I haven't taken any positions on this just yet, but I do think it's something we should watch closely. The Aussie crosses this week for me are super important. Here's Aussie dollar on the weekly chart just to give you prospect of where we are in broader trend. We've been trading within the confines of this ascending slope off the 2016 lows. It's been really clean on the broader prospect. It's been hard over the last 3 weeks or so on this weekly chart to kind of get any directional momentum as far as what price is doing. As it stands right now, we're looking for the possibility of an exhaustion low. Okay, you have those former opening range highs for last year, specifically that you made in March. Really nice pivot in price. That gives you 77.50. You have the 52-week moving average right down here. That comes in just lower, 77.30. And then you have the 200 long week moving average right here coming in basically where we bottomed out. So this whole range, guys, really critically important. Remember, nothing's changed on Aussie. I want to say over the last basically 2 months, our bullish invalidation for the broader uptrend that we've been in since 2016 is still all the way here, okay, at 76.35, 76.32. As long as we stay above this region on the whole, the broader picture from the weekly chart remains constructive. So, Mike, where does that leave us now, right? We came into resistance. We failed at last year's high. We pull back. We're sitting on near-term support. So it's either an exhaustion low here to try to play the long rebound. Again, you'd only be targeting this top side. This is really the critical resistance range we would need to break through to get anything going here. I'm going to get my circle here. There we go. And key support is right here. So it's either a exhaustion low here, look for that rally towards the upper parallel, or if we break lower, we have opportunity to short if that happens, but basically you'd be looking for an exhaustion low again, not too far off down near 76.30. So looking at this from the weekly chart, you kind of get a picture of where we are, right? Ideally, we find some support here, we'll start to move higher. Here's what Aussie looks like on the daily. Okay, so daily picture is not quite as clean. I have a basic trendline support off the lows here, which looks like it caught that low here. We rebounded off it. That's still the support structure to hold. 77.78 is going to be the 2016 November high, okay, from back here. And again, on the daily chart, again, having the 200 and 100-day moving averages converging again right there. So if we were to move lower in Aussie, I'd be very remiss to try to chase it lower, but I do think if that happens, you find some support a little bit lower down. Ideally, like I said, we're looking for exhaustion here. Here's what Aussie looks like on the intraday chart. So I added this pitchfork yesterday, and as I noted in the report, is a little bit too early to rely on this slope because we haven't gotten any inflection points just yet. However, I do like to throw it on there to shed some color. So if we are in the confines, if this is going to be an operable slope, you'd look to see, we'd look to find or hope to see no closes on a candle basis below that median line. So we'll check to see how this happens to the US Open right now. Remember, this is the objective weekly opening range lows too. So if this recovers back within that trend line, I'd still like to work with this slope, the 50 line further highlighting the 618 retracement here at 79.12. But if we settle and the US markets open below this slope, scratch this altogether, okay? If that happens, you're risking a move down near 78, and again, 77.78 is going to be that big level of confluence resistance from the daily charts on the 100, 200-day moving averages and that November 2016 high. So it's either a recovery here and a pullback up. If the U.S. markets open and we continue to hold above that median line, I'd like to take a long against that low, trying to play the upside targets. If we settle and the U.S. markets continue to hold below that, I'm not really going to do anything, right? I can't take a short from here. Stop would need to be against the highs too big. So in that case, we'd have to let this thing drop and look for a better entry a little bit lower down. Anything on Aussie? Looking for signs of consolidation, completion. I'm looking for signs that we're going to get an exhaustion low here soon. So the momentum signature certainly still looks pretty constructive since last week's low. There's the break from oversold territory. We broke into overbought. So on the pullbacks, I want to see 40 hold here as momentum support. Again, to suggest that the broader near-term upside targets are still in play. Aussie dollar going once, going twice. That is number 2. Okay. Next up from last night was, if you have time, could you talk about the SPX, DAX, and the Nikkei? So, Mihai, I don't have intraday setups on those, but absolutely, no question is off the table here. So DAX, S&P, and you want to take a look at Nikkei. Nikkei has been very interesting, actually. I just haven't been actively updating it, but we'll take a look for sure. Okay, so Mihai says, indeed, yeah, does look very interesting. It's actually the only one of the three that I've been watching, but we'll hit that in a moment. Let me get through these real quick. So that was Aussie dollar. Here's Aussie yen. Before we get into Aussie yen, why don't we take a quick segue into dollar yen, just to get a picture of where we are here. So look, yen weakness, right? I still think you have a little bit more yen weakness to go. I'm ultimately looking for 107.50. That's going to be the level of interest for resistance. Remember, on dollar yen, we've been short. Closed out a beautiful one yesterday. Here's dollar yen on the daily charts, I guess, first. So the major play last week was the run into 107.84, which was our bearish invalidation level. You had the median line there. You had the 2017 low day close, and that converged right there on the median line, which converged on the 50 line for the broader descending structure. Okay, here's dollar yen on the weekly charts, I guess. Right, so big region, at that 107.84, 108 handle. So the play last week, obviously, was the short off that region. We faded our way through that decline. We got limited out on the final piece of that trade down on that move into 106.38, 106.40. Here's the rebound. So look, nothing changes. Initially, on the initial approach, you want to bring down that 107.84 barrier. You want to bring down near-term resistance to here now. Okay, again, the median line drops. This 1618 extension, from the decline. The former swing lows, former swing highs. If my chart loads, from right here in July of last year. Sorry about that. There we go. So a decent area of which you would find some near-term resistance. Take this into the intraday charts, and here's what it looks like. And here's what we look like last night. Okay, so a little bit of a grind higher. I'm looking for exhaustion ahead of this region. Now, ultimately, the weekly opening range has just been tested. Here's your weekly open. You tested the weekly open resistance. You're pulling back now. You have a very clear-cut range right above support. So the emphasis, the emphasis for the bears would be on a break below this level, 106.10 back into 105.55. That was a big region. We caught the low there perfectly last week. Would be the first initial downside targets on a move lower. But right now, my focus is on a reaction off this level. If we get a spike, looking for some exhaustion, as close as you can get into a decent risk-reward ratio to short against that region for a move lower in dollar yen. With that said, okay, we always need to plan for both sides of the trade. If we run through this, say in US trade, and specifically get a candle close above, I'd be neutral on this. Okay, with what risk markets are doing, and specifically with what we're looking at on the TNX. I've brought this chart up to you multiple times. Here's the yield on the 10-year Treasury here in the United States. 290 is the level we've been talking about for weeks. Literally 4 weeks, we were talking about 290 being a major area of critical confluence resistance. You have the 50 line for the current multi-year pitchfork we've been working off of. The lower 50 line was a perfect tag of support. The breach saw acceleration. That line converges on 1994 trendline resistance, okay, or channel resistance. So big region for yields, a break above that, and there's likelihood for accelerated gains. And certainly that would have a pretty big impact on the yen crosses. So keep this in mind. We'll continue to track this, but as far as dollar yen is concerned, looking for possibility for an exhaustion trade high here near 107.50 if we get it. Any questions on dollar yen? It's a good thing we got limited out down here yesterday. All right, so the same setup occurs from last week. No changes. Still, that was the major support region we needed to break. That's now the resistance region we're trying to fade. Key support still 106.38, 106.45. Any questions on dollar yen, as we so affectionately call it, the abomination? Looks like we've been obsessed with this thing over the last couple of days, but it's worked out pretty good. Okay, so let's see if we can't get a fade opportunity here for a move lower in dollar yen. Next up is dollar CAD. So obviously, we just got stopped out of that trade. Here's what that looks like. Look, I still like the broader setup. I think as far as dollar CAD is concerned, the picture is very, very clean. So no change to any of the dollar yen levels. This is from Sunday. All the levels remain unchanged. So we came right into support. This is where we got out of the rest of that short from last week. We're now rebounding. Again, major resistance is right here down to 107.50. Dollar CAD. So look, this thing is really frustrating me. You guys know my story with dollar CAD. We tried to fade a rally a couple weeks back ahead of the Canadian CPI numbers. We got spiked out on CPI. It plummeted, came right back into resistance. Actually did tempt another short, really, really short-lived though. Took a quarter off, got stopped out at break even again. Yesterday, again on the rally, it looked very, very convincing. So remember, the broader picture for dollar CAD and why it's such a conviction trade for me is because of where we're trading on all different time frames. We're coming off of a big resistance. Here's dollar CAD on the weekly. The high week reversal close from December comes in at 107. What was it again? 107.25, 107.26. Okay. You have the former 2012 trendline support should offering some resistance now. Already did here before the break. Pivot back below. That's there. The 50 line for the current downtrend, that's there. So all accounts, all things held constant, momentum is at resistance, price is at resistance on a weekly basis. This is critical. So remember, on an intraday basis, though, this doesn't mean anything. So intra-week, this thing could spike into 129.27, then pull right back and close below that, and it would still be a hold. But on whole, there's a lot of things suggesting we should be looking for some near-term resistance here in dollar CAD. Might be worth another stab here today. Here's what it looks like on the intraday charts. First, start off with the daily. So the daily chart also suggesting that a 618 extension from the advance off the low comes right here, 127.23. We just talked about 127.26, right? Same region. 50 line for the broader median line formation, that 618 extension looks pretty darn good. So I'm still looking for some exhaustion, momentum on the daily structure, still holding 60. That's what you want to see from coming sub 40. So the exhaustion trade, guys, unfortunately, timing is everything, right? So we're still looking, I think, at the possibility for exhaustion here. I'm not going to jump into this again. By the way, ever since those few weeks ago when we tried fading this here and we got stopped, or what is the daily chart? When we tried fading it here, we got stopped out on that CPI spike. Ever since then, any short I've taken on dollar CAD, guys, has been a quarter leverage, just because it's been a tough turn, and I don't want to get caught continually getting stopped out on this. So stay nimble. Once we start to materialize on the turn, we'll start to press it a little bit harder, I think. But as it stands right now, the signal just isn't there for imminent reversal. So I'm on the lookout. Again, here's the intraday chart. Okay, so 127.23. This is what we were trading against. We spiked just higher here. It took us out. Want to see how this looks, right? If we get real near down dirty, right, you could probably interpret some of these wave formations as 1, 2, 3, 4, 5. This would be an A, B, C correction. Again, would suggest you look for the hold there and the turn lower. Oops. All right, so it might be worth another stab here shortly. We'll try to keep you updated. Look, if this breaks higher, again, like I said, 127.76, that 786 retracement also shows up on the daily chart up here, also converges on that 2012 slope over the next day or so. So keep that in mind on the upside if we do break higher. Again, another area which we could possibly find resistance. Now, it might seem to you guys like we're trying to fight this rally exceptionally hard, but again, it's important to keep in mind where we are in broader trend. The daily charts, the weekly charts still suggest that the top side's at risk here. So I just can't get excited about trying to buy dollar CAD, and we're still on the lookout for exhaustion. So keep that in mind. Again, stay nimble on any type of exhaustion trade that you try until we get a little bit more of a clarifying conviction turn. Any questions on dollar CAD? Again, we get CAD CPI, we get CAD GDP numbers on Friday. We also get the second revision on US GDP this week as well. So you have event risk from both sides on this one. And there's still plenty of week left. So hopefully, ideally, you see failure here, or even if we spike in 27.76, I want to see a quick and stern pullback. Okay. And then we'd start to look for the short side of the trade. Remember the seasonality charts, guys. We do publish seasonality charts on SB. Obviously, that's going to be under the charts section for the long-term charts. If you come here into the seasonality, okay, you can find this is updated monthly. Seasonalities for the commodity block, Aussie, seasonalities for Kiwi, seasonalities for CAD are all bullish. Bullish CAD means dollar CAD lower, right? Bullish Aussie, bullish Kiwi. These are one of the most seasonally strong, tendencies from a seasonality approach of the year. Okay, so going along with that theme, going along with the added low that we're looking for in the DXY, again, would suggest that we should be on the lookout for exhaustion in dollar CAD, possible exhaustion low in Aussie dollar. Okay, seasonalities again for Aussie, super strong over the next month or so. Questions on Aussie, or rather dollar CAD at this point. And again, here's seasonalities for dollar CAD, right? Really bearish, bullish CAD heading into March and April. Okay, so that is dollar CAD. I want to move on to the other updates from earlier this week. I want to take another quick segue back to the 25th, where we talked about the Kiwi. So the Kiwi, I haven't really been a big fan of it. I've been tracking this for you guys, but I don't like the daily chart on Kiwi. I just don't have enough clarity on the structure. The near-term charts have been pretty clean. So ever since the start of the week, we were coming into support, and as we opened up the week, that's kind of what I noted, is that we were sitting at support. That 618 retracement has been a rock solid floor. The possibility for an upswing here. I was looking for initial resistance here into the median line. We got into the 38.2 retracement and even overblew it by a while. But here's the decline lower. Again, what I'm getting concerned about is what we're doing right now. This is going to be, again, an exhaustion low. We're still unable to make a break of the lower parallel. Could see another rebound higher. So I'm actually going to go neutral on Kiwi dollar here, guys. I just want to put that out there. We've made a complete opening range. We broke. If this materializes and closes below here, you could see the downside break really accelerate. Remember, the downside break of a descending formation can sometimes be the sharpest part of the decline. So I'm of the mindset that actually Kiwi does look to find some support here near term for a little bit more of a significant recovery. But till that happens, again, we have to really be mindful of the fact that we're still holding pretty clean within the confines of the descending formation. Near-term resistance at this point, we're still going to keep it at 73 or so. Bearish invalidation, what would just straight put me bullish, would have to be a break above. I'm just going to drop that down to the new low. Would have to be a break above the upper parallel, i.e. that 38.2 retrace. All right, so we'll revisit this. The levels remain unchanged. Just take the retracement down to the new low that we made, but the broader picture and outlook remains unchanged here for Kiwi. Tony has a question on Euro Yen. Let me jot that down. Tony, I will get to Euro Yen for you 100%, my friend. Okay, so that is, what is this? Kiwi, number 5. Okay, last but not least, we also had a piece here that we were following on Aussie Kiwi. This one worked out pretty well. We were looking for the rebound here off the 2016 open was at 106.63. We rebounded off that level late last week, and we opened up the week on Sunday before the open looking at this formation as a possible guidance for the advance. Keeps the focus bullish above 107. Okay, remember on Aussie Yen or Aussie Kiwi, last week we were tracking the decline within this near-term channel formation. You got a raised floor. Okay, when it turns ahead of the parallel, that's a bullish signal. There's the break, and we closed the week above. So we were opening this week saying, look, this thing remains constructive above 107, basically the lower parallel here, the 50 line. We don't know if this formation's in place, but if that's to hold, we should be looking for a stretch up higher near 107.70. Bigger region is 108.21 into 108.30. That's kind of the major resistance region we're looking for. Here's Aussie Kiwi now. Okay. Let me take you back first, I guess, for the broader picture. Here's what the weekly charts look like. Okay. The reason we were looking for that possible turn higher is, again, this 618. Yeah, last week was a reversal candle that closed above it. Here's where we open this week. Okay. So the big resistance region on this, excuse me, if we do push higher, is going to be 108.40. Remember, we talked about 108.20, 108.30 on the intraday charts. That would include the longer running 52-week moving average. That's right here. Former slope support, and then 50 line for the decline rather, is right around that region. Daily charts. Okay, there's that pivot off the 2016 open, has been a pretty clear pivot in price. Here's the rebound push higher. Again, even if we break this, there's that 108.30 level. 200-day moving average comes in just higher at 108.40. And again, that's where we'd start to look for possibility of re-entry on the short side. Okay, for me, I'm interpreting this as just a false break of the median line. You had a sliding parallel here. You test it for a day before you recovered. So yeah, move back up towards 108.30, maybe even that 200-day moving average before you turn lower. It's kind of game plan here for Aussie Kiwi. Here's what it looks like on the intraday chart. Again, that near-term formation that we were looking at, we haven't got too much conviction off of the plays for this. So I'm still not really working with this as sort of a rigid type of formation. But there's that 107 level, okay, our bearish invalidation. We came into it, couldn't even get a turn that low. Here's the push higher. Again, stay constructive at this point against yesterday's low. Whoops. That's right here. Okay, topside break. Look for the upper parallel. Could offer some resistance. That's near the 108 handle at this point, but there's that 108.20, 108.30 zone. This is big. Okay, this is the big zone that I'd be looking for on a stretch higher here in Aussie Key. No change to any of those levels from Sunday. Any questions on Aussie Key? A tricky pair, and guys, you're likely to see a lot of back and forth because you're seeing similar moves in Kiwi and Aussie. So near term, I just do think that the Kiwi weakness has kind of been outpacing Aussie, so I still think you have a little bit more upside on this to go. Okay, that is number 6 on this session. Last but not least is Aussie Yen. So here's Aussie Yen. I think we covered this in yesterday's update. Here we go. So major things to keep in mind here for Aussie Yen. Since the start of the year, we held a very clear-cut key range. We talked about this since the start of the year, 87.55 support, 89.11 resistance, and pretty much all through January, we were looking for a break of that very tight range. A topside break would have led us up into 90.64, 91.25. That was the major resistance level where we just missed last year's high. Downside break, our initial target was right here at the 2017 Open. Former swing lows from December, decent pivot in 2017, and basic slope support. This is just a parallel of the slope resistance levels we were following. Now, if I take this to this low and you take this and adjust it a little bit, yeah, sure, kind of still puts us near channel support still. But at the end of the day, that break just missed the 618, and now the focus is on this tight region. Okay, this tight region right here. Here's what Aussie Yen looks like on the daily charts. So just off the advance from the lows that we made last year, actually the 786 retracement caught the lows perfectly. Again, there's that slope. This is a near-term slope for the decline off last year's high, parallel taken from the low here. gets a tag there, gets a tag there, gets a tag there, and converges on 83.38. Start the week. Key resistance near term, 84.25, 84.29. So this is your world right now for Aussie yen. Okay. Note that we are marking some ongoing divergence. It's subtle, but it's there. Price action, making a lower low on a closed basis, making a lower low on a closed basis. The oscillator holding equal lows on those dips. So the momentum profile suggesting that it's getting exhausted. There's a tire trade here as far as the push to the downside is concerned. Topside break here, that should open up the larger rally. Now, this is kind of opposed to if you look at our near-term outlooks for both dollar yen and Aussie. I think Aussie looks like it's constructive, which helps this case. But dollar yen, we're looking for the downside move. That's yen strength, which would put a cap on the top side here. So it's important that we're looking at each trade on its own merits. Dollar yen, still look for the exhaustion high. I'm not going to change my opinion on that. But Aussie yen looking for the exhaustion low. If one of those don't pan out, I think you get the topside break here. Specifically, the yen doesn't turn out and starts to turn lower versus, in dollar yen terms. This would be, I think, the breakout play I'd be looking for. So the key levels as that's concerned, 83.37, 84.25, 84.28 is the key range you need to look for. Topside break here, I think, would open up a larger rally in Aussie yen. Here's what it looks like on the intraday charts. We've been working with this really nice near-term descending channel formation or pitchfork formation. This is not reflected on the daily charts. This is the broader one from last year's high and this year's high, but just the near-term one off of the highs that we made this year. Here's your January and late January highs. It's been working out pretty good. Median line's been nice pivot in price, resistance, resistance, again right here. Okay, so you have a very clean-cut weekly opening range. Again, my favorite move is for a topside break to see at least 84.50. Ideally 85.50, 84.40 would be an opportunity of which you might want to look for more re-entries on the short side. But for me, based on the breakthrough here and based on the failure to touch the lower parallel before we turned here, my focus is a little bit more on the possibility of a topside break of this range to play the breakout. All right, that's kind of the game plan here that we're moving forward with in Aussie yen. Any questions on Aussie yen or where we stand from here? So we have our bullish invalidation level for the near term is still right here. So we're playing the rebound off this mark. This is the only thing that would just invalidate that bias. If we break there, guys, 83.13, 82.40, likely be a pretty quick move in that scenario. So just keep that in mind. Okay, and that's everything from my list. Awesome. So let me jump into your questions, guys. That covered everything that we've been following over on the intraday charts for the last couple of days. I see Pooja had a question on Aussie yen. Miha, I want to take a look at those equity markets for you and Euro yen for Tony, excuse me, Tony. But first, let's start in the order it came in. Pooja, want to take a look at Euro Oz. I think we took a glimpse of this not too long ago, I think in last week's webinars, but I haven't looked at it recently. So just give me a second here. And let's get our bearings straight. Oh, this one. So yeah, look, no change on this as far as Pooja, as far as Euro Aussie is concerned. For me, there's no play here until you clear 156.22, 157.70. If you're looking for range-bound action, it doesn't get much more range-bound than this. You know what I mean? Since the February Open, after the second, we've been sitting in this range for the entire length of this month. So look. Again, the similar discrepancies in the fact that we're looking for Euro strength and possible Aussie strength as well has me thinking this kind of sees a little bit more sideways action. So Pooja, play the range. Anything on the short side, she's saying. I mean, if you can get as close to 57.70 and a stop against that, sure. But just keep in mind, no targets outside of this range should be, you shouldn't be targeting anything outside this range until we finally clear. I don't know which side this is going to break on, guys. We're in the broader uptrend. I don't think that's changed. We've been constructive Euro Aussie for quite a long time. This is the weekly chart. It's been in a constructive path ever since the low that we made in 2012. The upper median line parallel catching the highs that we made in 2015. The lower median line parallel catching last year's low. The median line catching last year's high. Okay, so the key levels as far as the longer term charts, near term 54 is support, longer term 160.20 is resistance, but the broader picture is constructive. The question is, do you correct lower first before breaking higher? Sort of would be the better play in my opinion. But right now, just for the last 4 weeks, I mean, this thing has just been chop city. Okay, so that's the weekly chart, Pooja. By the way, as always, guys, I see some new names in the room here. Feel free, there's a camera button at the top of your go-to webinar screen. You can always take a snapshot of any of these charts if you need them for future reference. My other concern on this, Pooja, is that when we broke this momentum trigger in the RSI oscillator, we came back and it looks like we almost caught it as resistance. Again, that gives you a lateral to downside bias more than anything. So the weekly charts, nothing here to really get excited about. Daily charts, well, we just talked about that, the 2017 highs and the 2017 high day close, both achieved right here on the 12th, on the 1st rather, of December. That's the range we've been in. Look for a break. Okay, look for the break. Intraday, let's see what it looks like and see if we have anything that we can do here. All right, this is a stretch, but just bear with me. I want to see what it looks like. It's messy, but all right, I'm just going to leave that pitchfork on there. I have no way of validating this. This is not operative. I wouldn't be working off it, but I think it highlights some interesting levels here if we do get a downside break. Near term. Broader picture is constructive. My concern is that you get the correction first. So Pooja, you were looking for anything on the short side. So if you put a gun to my head, as I always say, I'm not in this, but if you had to put a gun to my head, I would say you look for a pullback before we start to move higher. The problem is, Pooja, we've got to clear this range. Bottom line, 56.20, 57.70. Until we clear that range, don't get too comfortable in anything here. Pooja saying thanks. The weekly helps. I'm holding a small short with a stop at 57.20 now. Okay. We'll exit before 56.22. Right. Yeah, that'd be the way to play it. And I have no problem with that, Pooja. You're talking to a short-term trader here. I got no problem playing the inside ranges. My problem is that you get a little too comfortable with it, and then you have an opinion that you think the broader picture is going to break up or down. And then you try to play the breakout from within the range. It's just not a prudent move, right? Because you're in the range. So even if you got a great entry and you were looking for the break to the upside, if you're still holding that, well, you're right back at break even. So for this trade, it pays to be nimble, get in and out within this range. Once we clear that, there'll be plenty of opportunity, I think, Pooja. But put a gun to my head, in my humble opinion, I do think the risk is for a little bit more of a setback here before making the move higher in Euro Oz. Does that help? Does that make sense? So again, there's that weekly chart if you want to take a picture of that. Kind of what we're looking for here on the broader picture. Pooja says, yes, thanks. All right. More than welcome, Pooja. It's always a pleasure. Mihai, let's take a look at some of the equity markets you want to take a look at here. SPX, DAX, and Nikkei. I don't know if I'll get to all of them, but let's take a picture. So obviously, you guys know I'm not really an intraday trader on these specific markets. Obviously, we do have to track them, but I'm going to start a top-down approach. All eyes and ears, says Mihai. All right, cheers. So just my take on things. This is the weekly chart on the SPX, and when we started to break down here early February, I should say late January, everyone started to scream to high hell that this thing was going to be, the next major correction. Technically, you did make a 10% drop. It's 11.4% on the stretch. On the close basis, 9.59. So from as far as corrections are concerned, which by definition are going to be corrections of 10% or more, we've done it, right? Now, the concern is that typically corrections of this magnitude aren't a 2-day or a 2-week event before you run right off to the races. Typically an event of a 10% correction or lower, which the closest we got was back here. That was actually a 14% drop here back in early 2015. Typically those tend to take a little longer. Even this drop here, this was another decent correction of 10 odd plus percent, 11%. That took what? Nearly 2 months before we started to recover. So yeah, this V-type recovery is a little concerning. We're not out of the woods till we make it back through the median line. That gives you 28.27 basically on the upside, 28.25. So just looking at this objectively, broader picture, larger type of trees from the forest type of deal, right? You came off of structural support on a closed basis that has not been invalidated. Here's your line chart, perfect touch. That's even a raised floor. And it still looks like you're within the confines of this formation. So that's the weekly charts, right, Mihai? That's just the bigger picture. Let's get into the deeper charts. Here's the daily. Actually, this is the 240. Here's the daily. Okay. Daily chart, also very similar formation, same formation that we were looking at. This a little bit more near term off 2015 highs. There's that low. You can see that the low stretch actually went for a perfect tag of the 200-day moving averages in the S&P 500. You saw 2 tests of that before ripping higher. I wouldn't be too excited until we get back above the median line. That's why people right now, I'm super cautious. Everyone's starting to get bullish to the hilt again. And I just don't know if we're out of the woods until we cross back above that median line. Okay, served as resistance, served as resistance, served as resistance. You saw a little bit of a hesitation there. Pivot break, saw acceleration. Pivot to the downside, saw acceleration. Again, that gives us a little bit higher right now, near 127.97 change. Now, if we were to get like a break lower, where would I start to look for support? Right here. That's the support structure. Okay, that's the low day reversal close for the year. It's 26.84. Look for initial support there. Is a perfect tag there that we made earlier this week this was last week on Friday before rebounding higher. So look, I think you might see some hesitation here if you get up into today near 27.97 and change. You might see some hesitation on the pullback. You broadly want to stay constructive above that slope. Intraday, I don't think I have anything for you. Let me see if there's any structure to this. Oh, this is the 240. It's null and void. 786 there. Near term resistance. Whew. All right, so just a bit higher from what I just noted. The intraday charts would suggest 28 instead of 27.97. 28 into 28.07. This is a big reason. The 618 extension from the advanced gives you even 28.20. So look, this thing is coming off support. I don't want to say I'm bearish, okay? It's looking higher, but I'd be looking for targets up here. So for guys who are long on the closer near-term approach, heading into 28, 28.20, I would expect some sort of near-term corrective action off that. DAX seems to be breaking lower again, and it was a leading indicator in this move. This is why I'm thinking S&P is also approaching a top. So I would agree with you on the near-term approach that we are coming at some near-term resistance levels of interest. I wouldn't call it a top just yet, Mihai, but certainly I do think you're on the right path here, looking for some exhaustion, possibility for some resistance just a bit higher from where we are now, right? Let me take a look at the DAX. That was the next one you wanted to check out, was it? Right, DAX. Here's what the Jur 30 looks like. We had a setup on this actually on the intraday charts here on SB Trade that's not too long ago, and it was on this breakdown here. The targets, as you can see, all got taken out. I didn't know what the hell to do with this thing once we broke down below 12,530. That was a pretty big level. The 618 retracement of the advance off last year's low, but it also had the lower median line parallel. What happened when that thing broke? Things went nuts. So look, as far as the near-term picture is concerned, even for this, I wouldn't be too surprised if we get a little bit higher near those former swing highs. That converges on the 50 line. I know that we've broken the underbelly of that slope, but still going to work with it for now. So maybe 12,640 as resistance. Let me just bear with me one sec. I want to see what this looks like. Might be a better slope. Just look at the reaction at the 50 line. The reaction there isn't too clean either. So yeah, I don't really have a clean structure on this. Don't stress the near-term structure on this one just yet. I just do think that you get a little bit more of a pop higher before this thing turns. I'd have bearish invalidation on this at 12,734, 12,739. Near-term resistance, bearish invalidation. Whoops. This is the 4 hour. This is the daily. Let me see what the near-term chart looks like. Hold on. So remember, when you're taking momentum triggers, guys, don't take it from the low in the oscillator. You want to take it from the low in price. So if I'm going to draw a momentum trigger here, I would actually be inclined to use this low and use this reference point. So that basically puts you at support right here. Okay, I'm still going to highlight that high. I like this level a lot for some reason. Okay, look to the left. Just a pivot in price any way you slice it. So let's put this as the, when I put a target as yellow, guys, it's kind of a low conviction if reached type of target. When I put it as red, that's basically the imminent level that we're looking at, like most importantly right now. Basically have support, support. And on that advance, actually, you could take a little retracement since we made that little pivot turn last night. Here's the 120. See what that looks like. Basically, on this interpretation right here, the only reason I like it is because the median line, resistance, resistance, raise ceiling. The 50 hasn't been a very clear pivot, but once we did break below, resistance turned ahead of it. Lower median line parallel so far has been pretty nice. So downside break from here, I think you get the drop down to 22.25, to be quite honest with you, just a 50% retrace of the advance, but major resistance interim 12,647, major 12,753. Mihai, does that help? Interesting price action here on the DAX. She says, yes, thank you. You're more than welcome. The last thing you want to look at was the Nikkei, and I think that one I should have something on it. Not on the near term, but yeah, this is what I was looking at for the Nikkei and the daily. And what I was looking at yesterday was this right here. I was like, damn, this thing is coming into near-term resistance. 50% retrace. This is of the entire 2017 calendar year so far, thus far, and the range is massive. And also the median line. You know, the lower parallel did get compromised, but on a closed basis was super clean. There's the median line again, the 50% retracement, followed by the 100-day moving average on the upside here. May cap things. Key resistance I put here, or the major area that I'd be concerned about, or the major area that would be needed to mark resumption of the broader uptrend. I don't think anyone's going to argue that DAX has been in a ripperoo since the 2016 lows. You know, that's the level that we would need to break through. You have even a median line there for the dominant slope. This is basic slope, a parallel off these highs. Saw one touch, two touch, three touch, break, saw acceleration, support, break, saw acceleration. That same slope in red off the highs here, perfect touch, perfect touch, perfect touch. So for me, you know, I'd be looking for possible exhaustion near 22,790. But at the end of the day, you know, I think that you're still in a constructive approach here for a near-term play. Let me see what it looks like intraday. Nothing there. Nothing there. Okay, so if we take it off this low, it probably will be a perfect touch. Close enough. That gives you resistance here. Let me see if that level matches up. Pretty close. One six one eight. All right, keep your eyes on this. This would be sort of the near-term setup I'd be working with on the Nikkei Mahai. So like basically look for support into that lower parallel. I do think you get the stretch into this region. I think this is the bigger region. don't necessarily put all the strain on 120 on 23,000. I'd have this right here, 22,800, 22,790 as the first level. This is your major resistance. I'd stay constructive while within this near-term channel. But again, remember the daily chart, okay? This is what we would need to mark resumption of the broader uptrend. So on the initial approach here, I would be really wary of any long exposure into that region. That's sort of the emphasis break that you need to kind of mark the resumption and the pivot back above that median line. All right, so some interesting price action there. Mahai, I hope that helps. I did have one other question from another person. Oh, Pooja, where am I doing? Euro Oz, was that you? Oh no, we got that one. Tony, Euro Yen, do you think another test of 200-day moving average could lead to a break lower? I took a short at 131.99 last week. Let's take a look. Or last night, you said. Let's take a look. Euro Yen. So again, thank you. Hey, you're more than welcome, Mahai. My pleasure. It's great seeing the room. Euro Yen, you're short from retest the 200-day moving average you're looking for could lead to a break lower. Well, look, if it breaks that support, absolutely. And not only that, Tony, to be completely honest with you, just between me and you, if this thing does break, I think you see accelerated losses. It's a multi-month low from back in November of last year. We haven't seen this price action sub that level since September of last year. Certainly the 200-day moving average has been offering support for the last 2 days, as long as those swing lows as well. Yeah, the emphasis is all on this break. You're absolutely right. You're absolutely right. Now, I also have the 2016 yearly open just lower, and that gives you 130.86. I don't want to put major emphasis on it, but it's been a decent pivot in price. Okay, you've seen multiple areas of which you saw resistance, the breakthrough, saw support there. So maybe a little bit lower. So I would open that region of support basically from like 131.16 into 130.68, this whole zone down here. This is the big play. That's the zone you need to break to get the validation for a much larger decline here in Euro Yen. To be quite frank with you, I'd be a little concerned. One couple of things I was looking at, I think it was last Sunday or Monday, or yesterday was Monday, I guess, but momentum, it's sliding below 40, but you're not really seeing that downside stab. Prices coming into support and former lows. So yeah, if you would get a rebound off this, I would treat it as correctionary, because this did break the initial yearly opening range lows and a big old outside monthly reversal. Take a look at Euro Yen from the weekly charts. Okay, and if I bring this into just a 1 month chart, you could see this is a massive monthly outside reversal candle. Doesn't happen what's the word I'm looking for? Doesn't happen too often, but when it does, it's pretty darn bearish, guys. Pretty darn bearish. This wasn't a full-on outside reversal, but here's the closest candle to what we've seen, right? And that obviously saw a massive drop. Here's another. This did turn out to be an outside reversal candle. That dropped lower. And when they happen on a monthly basis, it's very significant in my humble opinion. Now, looking at this, interestingly enough, this is also the 52-month moving average. I don't know if that has any meaning at all. You also have the 200-month moving average. On the monthly charts, I don't know how much credence you want to put on that, but certainly from the weekly charts and from everything that's held constant, you want to be looking, at this region here. God, there we go. At this region here, that former slope as the key support. And I do think, like I said, a break of the monthly opening range from January, an outside reversal month, that looks pretty bearish. So that'd be my take on Euro Yen near term. Your specific question was, so a break lower of the 200-day moving average. I think you'd be on point for a bigger run to the downside for sure. 130.69. Okay, Tony, watch that. That's your that's in my mind the line in the sand. A break below that, you're likely to see some accelerated losses. But Tony, watch that initial break first for 130.68. As far as the entry on your trade, love the 132 entry. I just wouldn't put your stop too far out, in my humble opinion. If you slide below this sort of pivot zone that we've been watching here, I bring my stops to break even or better as a protective move. But other than that, I do think you're on the right track here. You're still below the median line, pretty well-defined median line formation. 50 line caught resistance, median line caught support, support, break, instant resistance, 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 resistance. The 50 line lower side, support, support. That's your next level of interest. Okay, Tony, hope that helps. Guys, I'm way over on time, as I always do. I'd like to thank everyone who attended here today. I will see you all bright and early tomorrow morning for another intraday strategy webinar. Till then, best of luck trading. Watch those comments. We'll have another opportunity to review the dollar crosses tomorrow before Jerome's commentary. But do keep in mind you have those speeches on tap over the next few days, likely to throw a little bit of a wrench in broader volatility. All right, guys, best of luck trading. See you tomorrow. Cheers.